Good morning and welcome to NYSE TV Live. I'm Kristen Scholler here in studio above the iconic trading floor on what is a historic day in America. Election day is officially over and Donald Trump will become the 47th president of the United States. The race was called early this morning after the Republican candidate was victorious in the battleground states of Pennsylvania, Georgia, and Wisconsin. Today, investors are waking up to a stock market set to jump higher at the open because traders got exactly what they crave, and that is certainty. Well, in what's going to be a busy day here on Wall Street, let's take a look at what is on tap in today's show. As we parse through yesterday's results, I'll bring in our resident political expert, JD Durkin, to cover where we are and where we go from here. Plus, the stock market is going to open soon behind me, and a global strategist and regular here at the exchange, Jay Woods, will walk us through what we can expect in trade today and beyond. And as the Federal Reserve starts its two-day meeting intercontinental exchanges, Harvey Flax is going to tell me what the data show about the central bank's expected move. Well, joining me now with more, as promised, is JD Durkin, political expert and CBS News contributor. JD, good morning.
Good morning, Kristen. Good to be with you. A very late night for all of us, I'm sure, but good to be with you today.
Yes, indeed, in an early morning as well. A decisive victory, in fact, for former President Trump. A return to the Oval Office. How did he do it?
Well, he managed to flip these handful of key states. At least so far, we don't have a call on all of them, Kristen, but we talked about these 7 key battleground states, which include the Rust Belt, like Pennsylvania, Wisconsin, Michigan, North Carolina, Georgia, Arizona, and Nevada. And Donald Trump won the vast majority of those 7 states. And in doing so, he was able to do what he was not able to do against President Joe Biden 4 years ago. What we're seeing is really, I think, a political realignment. This is, really Trump was able to bring in, at least according to the numbers that we have right now, an incredibly diverse coalition, unlike maybe what he had in 2016, which largely went after particular demographics. We know, unlike the Trump campaign's approach in 2020, which at the time was to expand the base, the Trump campaign focus this time was to try and reach out to the type of voters that had not historically voted either for his previous campaigns or for the Republican Party. We were not very long until last night's election return before we started to see, wow, I think a lot of these demographics, a lot of these voters in the suburbs are not breaking Harris's favor, and we'll still wait to see. We still have more electoral dust to settle,
right.
But it was very clear that Trump was able to do what he has been unable to do previously, including win the popular vote for the first time.
Right. So I want to talk more about that in a moment, JD, but I think you bring up a good point. And what we saw play out, of course, throughout this election, and certainly yesterday as well, is that former President Trump, soon to be the 47th president when he assumes office on January 20th, was able to appeal to frustrated voters. What specifically about his campaign, including his populism stance, appealed to them?
I think disaffected voters who have felt left out of the process. I think that was actually tantamount to his 2016 campaign. But, Donald Trump was very open about the fact to tell voters in no uncertain terms, I am your retribution. And for Americans, I think especially in terms of the economy, the 27% of Americans who said the economy is my top issue, people clearly fed up with, in their view, their perception, paying too much money at the grocery store, paying too much money for gas, paying too much money for rent. And a vote for Donald Trump in their mind clearly was, this is my ability to fight back at the system. And clearly, despite the fact that Democrats point to Bidenomics and all the macroeconomic successes, perception drives reality. And it's one thing to have the macroeconomic indicators tell one story, but it's a different thing altogether to talk to a voter in a swing state and say, how do you feel about your personal economic situation? And I think that retribution argument really hit home, and that's why we're seeing the success for the Trump campaign this morning.
I think the grocery store is a great example because those prices do still feel elevated today, of course, in terms of how inflation has played out. So let's talk more about Trump's economic policy. Of course, he has pledged for mass deportations, huge tariffs. How could that play out in the near term?
Well, I think to his advantage, tariffs he's likely to continue to use as a negotiating tool. The good news for the president trying to use tariffs is that Congress has ceded tariff authority into the executive branch. In other words, we don't really have to wait and see what happens for the rest of Congress in order for Donald Trump to propose 10 to 20% tariffs. We know he's talked about 20, likely going to use that as a bit of a negotiating tool. Mass deportations, however, a fundamentally different story. This is really unlike anything that we will have seen in American history. I think the closest comparison is 1955 under Eisenhower, a lot of anti-Mexican sentiment throughout the United States. Those deportations, according to historians, only numbered about 1 million, and I say only relative to the promises of the Trump campaign, which could be anywhere between 11 and 12 million. The economic argument for soon-to-be, again, President Trump is that that'll be a boost to American wages, a boost to other parts of the economy. A lot of economists differ, and they say, hey, there's a lot of payroll taxes that undocumented migrants pay. They are part of our American community. They work jobs. They're part of the American economy. And we'll have to see, does this involve U.S. military? We have no idea how this is going to go, because that is truly an anomalous proposal we have not had to this scale in American history.
Yeah, I think one of the biggest questions now as we wait to see how this unfolds come January 20th. JD, I also want to get your take on this. You'd referenced earlier that he becomes the first Republican president in 2 decades to win the popular vote. When I had seen the stats this morning, that hadn't yet officially been confirmed. But is that where we stand as of about 9 a.m. Eastern time on Wednesday?
I think 2004 is the only other election that we've had in recent memory where that is the case. I mean, we're going to be talking about the fatal flaws of the Harris campaign here. What exactly went wrong with their calculus? It appears to me that where Vice President Harris really failed was to make this a referendum on Donald Trump. We can't, I don't mean to get needlessly divisive here, but we have to pay attention to the reality of the tone of the election down the stretch here. Vice President Harris using words like unhinged, using words like unstable, using words like fascist. That referendum argument against Donald Trump clearly did not do the trick here. Voters in these swing states wanted to hear from the vice president more about what she envisioned. What would you do your first day in office? What would the first 100 days of a potential Harris-Walz White House actually look like? And clearly she was unable to communicate that. Could not prevent the core constituencies of the Democratic Party from breaking. This was fascinating to me. Harris won female voters by 10 percentage points. Joe Biden won the same demographic by 15 percentage points over 2020. To our previous point, those core bases of the Democratic Party that the Democrats really had hoped in this shortened presidential cycle would break for Harris in the historic nature of her campaign. Like we said, by the time we hit the 9 o'clock hour last night, it started to become really clear to those of us who were following state by state that was not going to be the case.
She did, of course, and the Democrats, largely speaking, had a unique campaign in the sense that she only became, obviously, the candidate to go up against President Trump, former President Trump, now soon to be the 47th president, in this summer. How do you think that played a factor?
I think a lot of voters were sort of frustrated with the idea that for someone who ran for president in 2019, did not get any primary votes, did not go very far in that very crowded primary field, that she could basically be dropped in and replaced. A lot of voters I spoke with, I spoke with a lot of Trump supporters outside the MSG rally a few weeks ago. They said, how undemocratic just to kick out Joe Biden against his will, essentially, and drop in a new candidate there. I know there was a big boost of fundraising, a big boost for enthusiasm from Democrats to say, great, we have a true 100-day campaign with a generational candidate of a historic nature, but clearly far too many voters were frustrated with that prospect. Even if they've already they knew what they were getting with Trump, they were willing to go back with that instead of giving Harris a shot.
JD, I hope you can join us again, because that is a key question as to where the Democratic Party is left in trying to build leadership going forward. So hopefully we can continue this conversation in the coming days and weeks. JD Durkin, our resident political expert and CBS News contributor. Thank you to JD. Well, of course, JD just laid out the land, of course, and spoke about the balance of power in Washington. And up next, NYSE regular Jay Woods is going to join me in studio to talk through what this means for markets as stocks are set to jump at the open with a decisive victory. And we'll talk about which sectors might be impacted too.
Hello and welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. I am live on the floor with my friend Simeon Hyman. He's global investment strategist at ProShares. Simeon, thank you for stopping by.
Thanks for having me.
I can't believe I'm saying this. We're coming up on the 3-year anniversary, of BITO, B-I-T-O. That's the ProShares Bitcoin ETF. How's it going?
You were here with me. October
I was
2021.
here. I remember we were staring at the screens behind us. We were excited.
The volume was off the charts. I think we had about $1 billion in the first 4 hours.
Yeah.
The fund has continued to prosper. And we keep moving. We've now have the most crypto-linked ETFs as in addition to BITO.
So let's stay on the ETF. You know, we talk a lot about the benefits of the ETF wrapper. Are there benefits to the idea of Bitcoin in an ETF?
Sure. Let's start with the ETF itself. You can buy and sell in a brokerage account. You don't need a wallet. Now you have the futures, which are a regulated space as opposed to the loosely regulated spot markets and third-party providers, and you have a qualified custodian. But you bring up a second point, which is important, the distinction between our futures-based ETF and the spot Bitcoin ETFs. BITO is a 40 Act fund as opposed to the spot Bitcoin ETFs, which are 33 Act funds, and some folks do want a registered investment company or a RIC alternative. You also have options on BITO, very important. There aren't options on the spot, guys, and it's a robust spot market, the largest of the crypto-linked space. And again, that regulated futures market is important.
It is, and you know, as you mentioned, the options market, I mean, boy, options have just been booming this year. We're seeing it message and traffic. I want to take us forward though. So it's been 3 years since BITO. It's been listed here at the New York Stock Exchange. What else have you been working on over that time?
We're up to 10 crypto-linked ETFs in our suite. We're super...
Good morning and welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio. Well, stocks are set to jump at the open after former President Donald Trump won the 2024 presidential race, sending him back to the Oval Office for non-consecutive terms. Joining me now with more on what to expect in today's market action is Jay Woods, Chief Global Strategist for Freedom Capital Markets. Jay, good morning.
Good morning.
All right, what a 24 hours. We have a decisive victory and the markets seemingly responding to that certainty. What is driving these gains?
Yeah, well, decisive victory was the key to this. No one really expected this kind of decisive victory. So what we're getting is a Trump bump. And we've seen this before. We've gone down this road. This happened in 2016, except that was a surprise and people were had some angst that he won, and then we rallied strong. The S&P was up over 6% from when Trump was elected in 2016 to the end of the year. And then we rallied all of 2017, which I'll talk about in a second. But right now, we've got the certainty. Yes. We're getting a little pop. Let's see if we can hold on to it. It seems a little frothy, in my opinion, but there is a lot of enthusiasm that we put this behind us and we can focus on what's been driving this market, which is the economy.
Okay, so I do want to talk about where we go from here, right? Of course, we have an understanding of Trump's economic policies.
We do.
Growth, as you mentioned, is going to fuel stocks. So does today's market action, this pre-market action, portend what we could see over the next 4 years?
It does, but there are some concerns. My concern is watch the 10-year yield. The 10-year yield is now back up over 4.3. I think it hit 4.4%. It could be there right now. That is an inflationary sign, and we did see some inflationary fears after the first year of Trump in office. So let's see if this is just a blip and something we can get back under control when Powell speaks tomorrow, or a red flag going forward. But right now, the momentum is favoring the financial sector because we're going to have less regulation there, and we're seeing the financials pop. And then the small caps.
Right.
We've been waiting for the small caps to pop for a long time. Big gap up this morning. The only major sector that is yet to make an all-time high.
Yes.
So if you follow small caps, watch the IWM. That's trading at 236.5 on a gap up. 244.5 would be an all-time high. So traders are watching the small caps as well as some sectors like the financials and technology stocks that are doing well this morning.
I think you bring up a good point that these small caps for the past few years of this bull market really have lagged, even as the S&P has climbed over 60%. So why is a decisive Trump victory positive for the small caps?
Yeah, well, the small caps are made up of mostly biotech stocks and regional banks. So we have the financial sector, regional banks. They've been lagging. They're getting a tailwind right now. Biotech, one of the big things that Trump did, Operation Warp Speed. Yes, that was for COVID, but he also wanted to do that with the drug industry to speed up cancer drugs and other drugs that would help us. So the biotech stocks are jumping on the news of his return back to the Oval Office.
I want to talk about what this might mean for the Fed. We have heard many times from this Fed Chair Jerome Powell that the Fed is independent of politics and any sort of sway that it might get from the Oval Office. Could this change that dynamic tomorrow?
Oh, Kristen, that's $1 million question. Will it change tomorrow? No, it won't change tomorrow because Jay Powell's a master wordsmith. He's going to be put on the spot. That press conference is not going to be about the future of rate cuts. It will be a focal point. He's going to be asked again and again about the independence of the Fed, because during the campaign, during his first presidency, when Jerome Powell was appointed under President Trump, he was very critical and open about the Fed and wanted to have an influence on that.
Yes.
So will he remain independent? Will he try to make a change? Because Powell does have till the end of 2025, until his term is up. That will be the soap opera we'll be watching going forward. Tomorrow we'll focus on Fed rate policy, but it will be discussed. And once we get through Inauguration Day, that will be a topic I think you and I will probably revisit going forward.
Yes, indeed. So it's been interesting to see this reporting season for corporate earnings that companies have been noting on the earnings call. The term election, that has been coming up more and more. And so as we still have a host of companies set to report, how do you expect that might impact the results and calls ahead?
Yeah, well, you want to watch companies with Chinese exposure, these global brands. Retail stocks are trading down a little bit this morning. FedEx, UPS trading down. The Trump tariffs could have a direct impact. It could hurt Tesla too, which is another stock to watch because of the Elon Musk influence.
Yes.
That's a whole nother topic for another time. But as far as the earnings go, we're seeing consistent growth. Small caps are starting to join that party, and when they join, they make some noise. So I think watch NVIDIA will be the one everyone's going to talk about, but we have a lot of great companies behind us that are reporting over the next few weeks. We have retail earnings coming up. We have Walmart November 19th. That is a big tell of the American economy. So, yeah, earnings growth and the companies that lead us going forward, they'll have more to say about the direction of the S&P 500 over the next 3 to 6 months when they report. But right now, this is a Trump bump, and we're seeing a little bit of a breakout to all-time highs in the major indices, and I think that will continue into year-end.
All right, Jay Woods, friend of the show, Chief Global Strategist for Freedom Capital Markets. Jay, great to get your take this morning.
Great to be here on this big day.
Big day indeed. All right, well, from the impact on your investments to your savings and spending strategies, up next we'll discuss the personal finance aspect of the race. Trinity Chavez will join me from the trading floor with more. Stay with us.
Hi, I'm Isabella Bizone with Fixed Income in Focus. Today, I am pleased to have with me Laurent Pauillac, Group CEO at Millennium Advisors. Laurent, in the world of credit, we've seen a lot of change in market structure in the last 10 years with the growth of algo trading and all-to-all platforms. How have these new developments affected liquidity in fixed income markets?
Well, first of all, thank you for having me, Isabella. You have run a very good program. I'm pleased to be here. I'm going to share my perspective as a prop trading firm that has acted as an alternative liquidity providers in fixed income. Yes, market evolution has really transformed our markets for the last 10 plus years. With the advance of algo trading, we've seen a lot more participants. Now, every single investment bank and have an algo desk, as well as alternative liquidity providers like prop firms are very active in the algo trading space. With more data and the usability of AI in those markets, algo trading firm has created a lot of value. But what we found is that the liquidity they provide is really robust, mostly in a low volatility environment. All-to-all platforms have also expanded, and there's more than one platform today, and it's really blurred the line between the buy side and the sell side. But again, liquidity has been strong, mostly during low volatility environment. At time of market disruptions, that's where we see the weakness of these evolutions. You know, we all say that in the credit markets, liquidity is a mile wide and an inch deep. And at Millennium, we approach it a bit differently. We use algorithms to help us making decisions, but our model is really more trader-centric. And we use automations to help our people make faster and better decisions and respond.
Good morning and welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio on this historic day. Well, the balance of power in Washington is sure to impact your wallet. And with more on how to navigate the landscape, of course, after the election yesterday, I want to bring in Trinity Chavez, who joins me now from the trading floor. Trinity, good morning.
Good morning, Kristen. That's right. It's no secret that these times are certainly challenging, with consumers facing significant financial hurdles. From dealing with inflation and debt to finding smart places to park their cash, people are searching for the best ways to manage rising costs, safeguard retirement savings, and create extra income, all while staying financially resilient. So here to share more insights on how to navigate these issues is Jeremy Schneider. He is the founder of Personal Finance Club. Good morning, Jeremy.
Good morning, Trinity.
Thank you for joining us. I know it's bright and early there on the West Coast, so we appreciate you joining the show. So inflation is affecting everyday spending, as you know. So how can people best manage rising costs and essential areas when it comes to groceries, utilities, housing, like rent?
Yeah, well, inflation has come down a lot. It's actually down to about 2.4% right now, and you hear a lot about bringing grocery prices down. But I think consumers have to be realistic that prices aren't likely to go down. In fact, lowering prices is actually bad for an economy. Deflation would mean basically a shrinking economy. And so as an individual, what we should really be focusing on is raising our income to at least meet and keep up with inflation. So you can use that as like a negotiation tactic. If you're getting a raise at your job, say, hey, my pay hasn't even kept up with inflation. So like an inflationary raise plus any raise that I have due to like a increase in my workload.
And you know, while interest rates have been dropping lately, rates are still affecting credit cards, loans, mortgages. What strategies should individuals use to manage their debt effectively?
Yeah, with debt, you know, the rate has a impact, but what the bigger impact is generally the principal. And so while it's important to look at these macroeconomic moves like what rates are doing, it's more important to focus on paying down your own debt. If you have credit card debt, the difference between 20% and 24% isn't really your problem. The problem is you got to pay off that debt. So it's important to be hyper-focused, take all your extra income, throw it into that debt, get debt-free, build an emergency fund, then you can start investing. That's kind of your financial framework for improving your own personal finances.
And you know, we are living in a very complicated time right now, especially as we got the election results this morning. It's projected, obviously, President Trump will be the next president of the United States. So how do you think that people should adjust their portfolios during an uncertain market conditions and potential market volatility?
Well, I'll tell you personally exactly what I'm gonna do with my portfolio in response to all this different volatility, and that is nothing. In fact, if you look historically, the market doesn't really care who sits in the Oval Office. If you look at a 60-40 portfolio of stocks and bonds over Democratic presidencies, it's about 8.4%. Over Republican presidencies, it's about 8.2%. So it's very, very close. And we don't expect any sort of changes based on who's in the office. And so I'm doing nothing. I'm buying and holding. I expect volatility, but I'm going to ride that out and appreciate the growth of the entire market.
Smart places do you recommend that consumers should park their cash in today's environment, such as high-yield savings accounts or treasury bonds?
Yeah, I'd say you should only have really enough cash to have your emergency fund. So I actually keep relatively little cash, about 3 to 6 months of my expenses. A high-yield savings account or a money market fund is perfectly fine for that. Beyond that, I put my money into the market. I buy and hold index funds. I buy broad market, low-cost ETFs and index funds, and I ride out the volatility. And so while I do keep a little bit of cash in my account just to cover any unexpected expenses, most of my money is in the market, letting it ride, getting those those bigger gains long term.
And what should individuals know, especially approaching retirement? How should they safeguard their savings that they have in those 401ks or their retirement savings accounts?
You know, it's something you shouldn't be doing that's responsive to the market. If you are trying to make moves based on what you see in a presidential election or with rates, you're going to be much more likely to hurt yourself than help yourself. A better strategy is to have a slow progression towards bonds as you age. Generally, once you're about 40 or 45, you want to take 1% or 2% per year off the table out of the stock market into the bond market. That way, when you're more like 65, 70, you're going to have income-producing bonds that are much less volatile when these things change, and you can basically live off that income. But you want to do that slowly as part of your plan, not in response to what we see in these macroeconomic conditions, whether it's elections or rates.
Jeremy, briefly, we have about 45 seconds left here. What are some viable side hustles and remote opportunities, and what tax considerations should people keep in mind?
You know, side hustles have become a much bigger bigger forms of income. There's more 1099s now than there ever have been. I'd say for you though, primarily look at where you want to be in 5 years. Make sure your primary career is growing. I wouldn't just rush out to drive Uber and think that's going to be the best finance for you. So I'd say make sure you're growing your career. But if you want to start a business, whether it's dog walking or consulting or landscaping or contracting, it's a great way to build some extra income and maybe even be your primary source of income.
A lot of key takeaways right there, Jeremy. Thank you so much. Again, Jeremy Schneider, he's the founder of Personal Finance Club. Now we're going to take a quick break, but we'll see you on the other side.
Technology is very important to us. Actually, we are one of the first companies in the industry to fully adopt cloud-based software applications.
Stephen, it is wonderful to have you on Floor Talk here at NYSE International Day.
Thank you. Thank you for having me.
So now, I want to start off by talking about the company. Tell me about Chance.
Thank you. So we are Chance, short for CYYS. We are China's largest freshly made tea drink company. So we are directly operated. Currently, we have 900 stores across the country with more than 6,000 employees. So we were founded in 2013 in Changsha City from China. So on top of the fresh made drinks, we also offer lifestyle retail products like these ones. So we started offering them since 2020. Right now, it contributes to more than 30% of our total sales. To my knowledge, that is the highest in the industry.
Now tell me, how does technology drive the customer experience?
Technology is very important to us. Actually, we are one of the first companies in the industry to fully adopt cloud-based software applications. Just to give you an example, so people are familiar with the Starbucks apps. There are a lot of functionality in it. So we also have a similar WeChat mini program in China. So for example, if a customer is interested in to buy one of these retail products, they can use our WeChat mini program to search exactly which store has the inventory. And once they find it, they will be able to either to buy it or they can.
Good morning, everyone, and welcome back to NYSE TV Live. I'm Kristen Scholler. Well, with Veterans Day coming up on Monday, Academy Securities, the nation's first post 9/11 disabled veteran-owned and operated investment bank, is set to celebrate the opening bell in just a few moments. You can probably hear the sound behind me. The firm says that it operates at the intersection of geopolitical risk and finance. And as the crowd builds before the open, my colleague Trinity Chavez is on the floor amid the action. Trinity, what else do our viewers need to know about Academy Securities as it prepares to ring the bell?
Well, briefly, Kristen, I do want to point out about all the action. As you mentioned, there's a lot happening around me as we get ready to open up the U.S. equity markets. There's a massive crowd behind me, again, to support the Academy Veteran Impact ETF that trades on NYSE ARCA here at the New York Stock Exchange. And this is a fund that's all about creating income while giving back to the veteran community. And again, we have a massive crowd just gathering behind me. The market has been flying this morning with the futures pointing to about 1,300. And I was speaking to some of the traders here on the floor, Kristen, and they were telling me that they haven't seen the S&P 500 up this much, over 500, probably since the early 2000s. So again, a very busy day at the exchange. There's a lot that's going to happen and transpire throughout the day. This is where we're starting, but it's going to be interesting to see where we're going.
Trinity, of course, we've been covering how the market is set to jump at the open, and we know well that in covering this market for a very long time, it craves certainty, and it was a decisive victory for former President Trump called early this morning by the national news outlets. Trump, of course, took to the podium early in the morning, and we are waiting to see how the rest of the day plays out, but we are looking at decent gains across the board. And with that, let's take a look at the opening bell as Academy Securities celebrates the open. All right, we are officially off to the races here at the stock exchange. The first day of trade after the presidential election. Former President Donald Trump decisively winning and set to become the 47th president of the United States, serving non-consecutive terms. So with more, as we see the major indexes jump 3% on the Dow, 2% on the S&P 500. I do want to bring in Michael Ranking, Director of NYSE Research. Michael, great to turn to you this morning. And what should our viewers make of this strong stock market at the open?
Morning, Kristen, and thanks for having me back on. Look, it's been a very exciting morning here down on the exchange. I showed up here pretty early. You already had the brokers and traders. We're already taking to the phones, talking to their clients, preparing for that opening auction that we did just see, right? And we've seen a very strong risk-on move, in the overnight session, and that's carried through to the morning, to the start of the morning right now.
Mm-hmm. Do you anticipate that these gains will hold? And what is behind the gains? Is it that we actually have certainty, which some might not have had expected based on how close this race seemed to be?
Yeah, so look, I mean, if you think about things, right, markets had been starting to price in the prospect of a Trump presidency over the last month or two, right, and they seem to have sniffed this out pretty early, and that happened in the overnight session last night as well, as you started to see futures moving higher, right around 7 o'clock in the evening, and that's carried throughout the overnight session. There were really no big surprises, right, and we removed some of the biggest outlier risks, like a long drawn-out process and things of that nature, from the equation. So when you remove, those downside tail risks, right? If you think about things from an expected return, a weighted probability of expected returns, if you remove, some of those tail risks, right? That immediately just, leads to some upside relief within the marketplace. Right, and we're seeing kind of money has moved to the sidelines over the last couple of weeks as we've been expecting some volatility. We didn't get that, so we're now starting to see that money come back in.
Mm-hmm.
We're seeing some of the systematic flows are going to start to move into the market, as well as you're seeing the VIX move lower, right? And company buyback, the company buyback blackout window is also closing, so you're going to start to see issuers starting to buy back their own stock. It'll be interesting to see if we can hold these gains, kind of after the open, or whether or not we start to see a little bit of a sell the news response.
That is my next question, Michael, for our viewers. Where do we go from here? I'm not surprised that we see stocks, the major indexes really ripping it, because I think we did get these results sooner than many had anticipated, based on the reports that it was such a close race, even though we know markets sometimes do get ahead of the game, and they had expected for maybe 6 weeks now that Trump actually would be elected. We know he campaigned on a populist economic agenda, has promised things like huge tariffs, and certainly will take more of a protectionist tone in America. What does that mean for the economy and markets over the longer term?
Yeah, look, I mean, right now you're seeing markets suggest this is like a pro-growth move. This is a pro-growth move, right? So we are seeing Treasury yields moving higher, and that's one of the concerns that people have talked about, and I can turn to that in a second, right? But that move is happening in the expectations for higher growth, a more pro-business, kind of environment, right? Kind of the unleashing of some pent-up demand and kind of M&A activity and capital markets activity, right? That's really helping the financials move higher this morning, right? If you looked at in the pre-market, the regional banks were up, something close to 10%. Mm-hmm. And if you look at the, kind of the small caps, right? The Russell 2000 is outperforming. We were up 5%, right? Just ahead of the open. And what we've seen in the last month or two is that when Treasury yields are moving higher, the small caps tend to underperform. What we're seeing this morning is the fact that financials, industrials, and healthcare all make up, each respectively have about a 17% weighting in that index, and are all widely expected to benefit from a Trump presidency. Though that's really helping that index move higher, right? They're also more domestically centric companies, right? So,
Mm-hmm.
that protectionism side of the kind of Trump agenda also helping there as well.
The next major market moving event, perhaps, Michael, of course, is that Fed decision tomorrow, including a press conference by the Fed Chair Jerome Powell, where I'm sure he will get questions on the election and, of course, the Fed's independence moving forward, with Powell maintaining, of course, up until this point, that the Fed is an independent body. How do you expect this could impact that decision and press conference on Thursday?
Yeah, I don't think there's necessarily any change coming tomorrow, right? So I think markets widely expect the Federal Reserve to cut rates by 25 basis points tomorrow. That's what I would expect as well. I think the bigger question is going to come, in kind of the December timeframe. We're going to have to start to see, what economic data looks like. If you think about, we just talked about from a market perspective how, this uncertainty has been an overhang. That uncertainty has also been an overhang, from an economic perspective, right? So as, we now kind of know what the next 4 years are going to look like, right? Companies can start, investments, right? And sales processes will move forward, and we could start to see the economy, kind of inflect higher from here as well, right? So the bigger question is going to be, is the Fed's rate cutting cycle as deep as we've, as markets had previously expected? But one of the things that I pointed out is as long as rates are moving higher for the right reasons, namely growth, then markets are going to react positively to that.
All right, Michael Ranking, Director of NYSE Research, joining us as the Dow jumps 3% at the open. Michael, thank you.
Thanks for having me.
All right, well, as we are officially underway in today's post-election day trade, we're going to hear from the company celebrating the opening bell after a short break. It's the veteran-owned investment bank Academy Securities, and they'll join Trinity Chavez on the floor up next.
You think about it, providing energy does improve lives. Your life gets pretty miserable pretty fast if the lights go out, if you can't get the fuel you need to get from point A to point B, groceries don't show up on the shelves, you can't get your kids to school. It's a tough life without energy. And so our mission is to make sure that people have access to the energy and the materials they need to have a great lifestyle, to have a sustainable lifestyle. And over the years, we know that it's going to evolve. The kind of energy we may be providing to improve people's lives may evolve from what we do today, but we're committed to ensure that people have access to low-cost, affordable, sustainable, abundant energy, just like we've done for the last 125 plus years. Pinnacle really epitomizes the perfect opportunity for us because it sat right next to our backbone, our trunk lines. It had a brand new state-of-the-art gathering and processing facility that could process 200 million standard cubic feet a day of gas. And it had plans for another one and the utilities in place for another one. And there's room for even more expansion. So we could do an inorganic acquisition that allowed us to do more organic growth over the long term. And so we were able to buy it at a very reasonable value and create even more value by expanding it over time. Today, we're now processing 50,000 barrels a day, give or take a little bit, of renewable feedstocks with low carbon intensity, and we're selling it as renewable diesel direct to customers at our 76 stations in California and other locations on the West Coast. And we're now starting to build inventory of renewable jet fuel that can be blended with traditional jet fuel and marketed as sustainable aviation fuel. So we're well off to a good start with our rodeo.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. We are just about 10 minutes into the start of trade after Election Day in America. And you saw Academy Securities up there on the opening bell podium celebrating the start of trade today. I do want to send things down to my colleague on the floor, Trinity Chavez, with more. Hi, Trinity.
Hey, Kristen. That's right. With Veterans Day just around the corner, and Academy Securities, the nation's first post-9/11 disabled veteran-owned and operated firm, is an investment bank that provides and prides itself on operating at the critical intersection of geopolitical risk and finance, bringing unique insights and expertise to the market. To talk more about this, I am joined now with Seth Rosenthal. He is the Chief Investment Officer of Academy Asset Management. That's the sister company to Academy Securities. Good morning, Seth.
Thanks for having us here.
Talk to me about how you're feeling right now, having your whole team from your sister company here supporting NYSE and also ahead of Veterans Day.
Yeah, it's great. Just thinking about our mission and what we do for veterans in terms of mentoring, hiring, and training veterans. On the heels of post an election, just thinking about democracy as a whole. And then, what we saw up on the podium, you had 15 veterans that have raised their hand to support the country. And, we're really excited about the support that the NYSE has given us and what they do for veterans as well.
I do want to also talk to you about how this focus, your mission, and what you pride yourself on really helps the company's approach shape its business strategy and investment banking opportunities.
Yeah, so we have a Geopolitical Intelligence Group that consists of over 30 retired admirals and generals that really have their finger on the pulse, all things geostrategic risk. And it really helps us shape our investment thesis at Academy Asset Management, but also it helps us deliver that to clients, which is a unique content that no one else can provide.
And as you mentioned, there's a lot of geopolitical movement right now, and we're living in uncertain conditions at the moment. But talk to me more about how Academy Securities helps your clients navigate through uncertainty in the market.
Yeah, so I just think about all of the geostrategic things that are going on. You even roll back the time back to when Russia had tanks on the border of Ukraine, and our folks saw what was going on, and they were very confident that Russia was going in, and allowed us at Academy Asset Management to start thinking about what are the derivative effects of that, while the rest of the world was saying that's not going to happen. And so, we were able to see the inflation effects and the commodity, the spikes to commodities that other market participants were not.
What unique perspectives and innovations does Academy Securities Management really bring to the market when it comes to inspiring other corporate companies to build relationship and help the community?
So you think about everything going on in the world geopolitically. It's, the temperature around geopolitics is not going down. Russia, Ukraine, what's going on in the Middle East, Taiwan, and China. And then you think about our intelligence around AI and cyber. The temperature around geopolitical risk is not going down, and that's where we can add value to clients.
Well, thank you so much for all of that feedback, being here today at the NYSE, and your continued support and everything that you do.
Thank you very much.
Thank you, Seth. Now I'm going to send things back over to Kristen in studio. Kristen?
Trinity, thank you so much. Well, with the investing landscape in center focus, traders are tuned in to the Federal Reserve's two-day meeting. Starts today and ends with the latest decision on rates on Thursday. I had the chance to speak with Harvey Flax, Intercontinental Exchange's Director of U.S. Interest Rates Futures Business Development. And here's what he had to say about what the data is indicating as to how the Fed will move forward with rates on Thursday.
25 basis points, or cut rates 25 basis points tomorrow. There's 98% chance of that, reducing their Fed funds rate from where it is now to 4.5 to 4.75%.
And what does the dot plot that the Fed releases indicate in terms of how many Fed cuts we might see in the future?
So basically the Fed polls its Board of Governors and its regional bank presidents for their views on where the federal funds rate is going to be over the next 2.5 years. Those views are basically put onto a graph as dots, and hence the name. So those dot plots are released on a calendar quarterly basis in conjunction with the Fed meetings. And the September meeting indicated that the rates would fall 100 basis points this year, 100 basis points next year, and an additional 50 basis points in 2026, ending with a target rate of 2.75 to 3%.
I want to hear more from your perspective and what you do at Intercontinental Exchange about the expected pace and depth of these cuts and what it means for our viewers.
So coming out of that Fed meeting in September, the Fed basically surprised the market. They cut rates 50 basis points, leaving another 50 basis points based on their dot plot for the rest of this year. Initially, back in September and going into October, the market was pricing in a slightly more aggressive Fed. I guess the market was more viewed on the Fed defending the employment sector of its mandate, and they priced an additional 75 basis points for this year.
We've gotten a lot of economic data of late. We got the first read on third quarter GDP, the October jobs report, inflation as well. Have these economic data points impacted expectations at all?
It's been an interesting couple of weeks, Kristen. The market, as you indicated, received, since the September meeting, additional employment and inflation reports. They digested them. They were more or less in line with expectations based on the Fed's dot plot. However, as markets continuously look forward, they began to price in the impact of future administrations' economic policies and how that would impact the Fed's dual mandate. So as far as the rest of this year goes, the market continues to price in a 25 basis point cut for tomorrow and a 25 basis cut for December. However, going forward in time into 2025 and 26, it's indicating a slower pace of Fed cuts.
Mm-hmm. What does this mean for the mortgage industry?
Yes, so the mortgage industry certainly takes its cues from the Fed, from the Fed's monetary policy stance. Tracking that mortgage rate daily using the ICE 30-year fixed rate lock mortgage index, which is an index of where the American consumer locks in their mortgage loans. That index basically started pricing in a mortgage market movement as early as last July. And by the time the Fed met in September, that market was already down 100 basis points. Since then, in conjunction with the broader market sentiment of the unknown, that market has basically given up just about the entire 100 basis points of cuts and is now sitting where it was back in July. Looking forward in time, using the ICE rate lock mortgage future, Q2 of next year indicates rates are basically stagnant. The mortgage rate will not change from where they are now.
Interesting.
Of course, that could change as more data comes in, literally daily.
Anything in particular that you'll be waiting to hear from the Fed chair when it comes to his press conference after the decision?
I would like to hear, or I guess the market would like to hear, their views on, I guess, current inflation. Because I think the Fed is very much focused on the inflation component of their dual mandate. Again, they've taken rates up to where they are now basically to combat inflation. So moving forward, is it steady state, matching that dot plot, something else come on that they're concerned about? They're usually pretty, keep things close to the vest, but they certainly will give up information about their views on the current market environment.
Thanks again to Harvey Flax for joining me ahead of that Fed decision tomorrow. Well, we've covered a lot of ground on today's show, parsing through the election results, how it will impact markets. And given all this, we also want to provide you with the headspace that you need to have a happy, healthy day. So up next, a senior mental health coach from the meditation app Headspace will join us for tips on how to breathe through the news and changes. Stay with us.
At Augury, we work with the largest manufacturing and industrial companies in the world to make their production lines more reliable, more productive, and more sustainable. And we do this by infusing every layer of the manufacturing stack with AI and digital solutions, starting from machine health, which is the maintenance and reliability aspects, as well as process health, which is process optimizations. How do I manufacture quality product? How do I reduce the waste? The energy consumption of my lines.
And speaking of machine health, let's talk about Augury's machine health since raising $180 million in funding.
You know, I mentioned we work with the largest companies, and what we've learned through the years is that the problem that we solve, machine health, is not just maintenance and reliability, it's a supply chain resiliency problem, right? It's a sustainability problem, a talent shortage, and upskilling problem. And add to that the geopolitical tensions that we're living in, the environmental challenges that we're facing. I think the industry today understands that we have to fundamentally transform how manufacturing is being done, right? And as I mentioned, how do we bring AI and digital solutions to every single layer of the manufacturing stack? So what the funding enabled us to do in the past 3 years is not only continue growing our business, right? So today we're working in over 40 countries, as an example. We entered new segments with our partner Baker Hughes. We went into oil and gas and the energy sector. But on top of that, it enabled us to be bolder, right? To be that partner for our customers that helps them address the key challenges of AI and digital manufacturing in general.
Are there any specific technological advancements that Augury is focusing on to help enhance the production of health diagnostics?
Yeah, so we're always looking for ways to increase the coverage of how do we support more machines, more manufacturing.
Welcome back to NYSE TV Live. I'm Trinity Chavez. Now, as we are in this election cycle, and now that President Trump has been declared as our 47th president, stress levels across the country, well, they're on the rise. In fact, the American Psychological Association is reporting that 69% of Americans feel that the 2024 election is a major source of stress. So here to help us navigate through these heightened emotions and offer some practical tips is Shula Malamed. She is a senior mental health coach at Headspace. Shula, thank you so much for joining us.
Thank you so much for having me.
Now, I do want to say election cycles, they're stressful in general. We're dealing with a lot of stress in life as we know it. But a lot of the time, many people don't even know that they are under stress. Walk me through that. How do you actually know if you are under stress and how should you navigate that?
Yes, I think that there are a lot of different manifestations of stress. There are moments in our lives where it can be very obvious and we can actually name it. But there are other times where we can feel irritable, where we are not sleeping well, where we feel like our relationships are strained because we're not able to communicate. We might not be taking care of ourselves as much. We might not be doing the things that we need to do to make ourselves feel better. So I think it's really important to check in for any of those signs and really identify, okay, why am I not connecting with the people in my life as I'd like to? Why am I not doing the things that bring me joy or give me ease? And it might be because you're stressed out and you're not able to do the things that are actually going to help you with that.
And stress levels, it doesn't only impact the person who is under the stress, but also the people around them, their loved ones, their family, their friends, and oftentimes, according to research, they isolate themselves. How should people address this, or what should family and friend members do if they see that someone is in need?
Absolutely. And isolation has been a big issue, especially since COVID. It has been something that we've been seeing across our members and seeing in the environment. And isolation can feel like protection and self-protection when one person is feeling stressed out, when one is feeling like they don't know how to handle their emotions. And the antidote to that could actually be connection. And if we notice that somebody in our lives is isolating more, just checking in on them, not being shy to say like, hey, I noticed that, I haven't heard from you in a while, no big deal. I just want to check in to see if you're okay. And just opening the door for them to walk through and actually express what's going on in their lives.
In your experience, what are some of the most prominent ways that stress impacts a person, or is it based off of the individual?
It's really based on, there are universal experiences. I think being cranky and taking things out on your partner could be something that can come out. I think it depends on who you're really talking to. I think not performing at work in the way that you'd like to, not sleeping, and not caring for yourself. I think self-care really goes out the window when one is stressed out, and that's why self-care is actually the antidote to it.
Yeah, actually, I want to get into healthcare because the wellness sector overall, it's projected to hit $9 trillion by 2028. Many people are now investing in themselves. Is that what you're seeing across the board?
I'm seeing that people have more of an interest of doing it. And we've seen it in Headspace since the pandemic. People really started investing in their health and their wellness. They had more time to think about their mental health and their wellness and the impact of life and the world on it. So it's become something, as we've become more interested in longevity and living bigger, bolder, brighter lives, health is a big part of that. It's all about preventative care, and preventative care is also mental health care and taking care of yourself.
Can you talk about some of the tools that Headspace actually helps the consumers and your clients do to help increase their overall health and well-being?
Well, specifically right now, during this election season, we've had the Politics Without Panic collection, and that has been really supportive for our members who are having election-specific anxiety, and we've had a lot of great meditations and podcasts and exercises for people to dig into to really care for themselves, to normalize some of the experiences that we've been having, to encourage us to, get off social media, get off the news sometimes, take care of yourself. So we really we have great tools like that. And sometimes people don't know where to start with meditation. People don't know where to start with self-care and how to think about things differently. And we have a lot of resources to help people when they're feeling overwhelmed, help people feeling better when they can't sleep, helping people feel better when they're going through experiences like political anxiety or fertility issues and so many other things. So it's really about giving people the resources and letting them know where they can start with it.
What's your favorite thing to do to manage your stress?
Oh my goodness. I would say, I saw this meme that was like, I am struggling between being informed and being like mentally healthy. And I think for me, it's really knowing when it's time to shut off the news or shut off social media and go outside and touch grass, as the kids say, and really get into the senses, which is what's so great about mindfulness. It's about putting yourself back into your body and really exploring your environment and knowing what it is that you can control and what you can't control.
I love that. Well, thank you so much. I'm sure that this segment will help many people who are watching today's show. Thank you so much, Shima.
Thank you so much for having me.
It's a pleasure.
Great day.
Now, I do want to bring back in Kristen Scholler in studio as we wrap the show. Kristen, it's been an action-packed show. The floor was packed. Traders, there was a lot of action that we were capturing here as they are managing the market movement. It's been a busy day.
Yes, a busy day indeed, Trinity, and I'm glad that we could hear from that Headspace expert, a coach, in fact, of course, because keeping sane and protected, of course, during all of these twists and turns is very important as well. So I think a good reminder to our viewers. But you're exactly right. We look at the stock market. It is ripping today as expected, and that's because we had a decisive answer early this morning. The race called for Donald Trump. He will become the 47th president of the United States, serving 2 non-consecutive terms. But we see the Dow up about 3%, the S&P rising about 2%, Bitcoin on a tear as well. We had seen Donald Trump, of course, warm up to Bitcoin, and as did Kamala Harris during this particular campaign. Trinity, I know there's a lot of noise happening down there on the floor around you, so a story that we'll continue to cover throughout the session. Trinity Chavez down there on the floor. Trinity, any parting words?
I would say that, we're going to continue to follow how this whole day transpires. It's going to be a very action-packed day, as you said. I was speaking to some of the traders. They were saying they haven't seen the S&P up as this high since the early 2000s. So a lot to look out for.
All right, that's going to do it for NYSE TV Live. Thanks for watching.
In life, I'm reminded that it's not about the destination. It is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead.